Today, how are you feeling?
Great. So it's good to see you all, and I hope we'll have a very interactive and good conversation, and exchange our thoughts. It's not just one-way communication. We would also like to hear from all of you.
Oh, so it's digital and not analog. Okay, thank you so very much, Mr. Atul. How about Mr. Pradeep? Mr. Pradeep, how is it that you're feeling?
Hey, hi, Nikita. Thank you so much for giving us this opportunity, and we're glad that amidst all this challenges, and very good thing that Anisha was sharing, that the biggest game changer was this current COVID-19 issue that we had. That was the biggest digital transformation for a lot of companies, and we've experienced that in the last 2 years as well.
So, gentlemen, before you start, of course, we have to ask you one question. Okay, so the question is, if you could use technology to combat one evil in this world, what would it be? And while you think, let me share my thoughts. Like, for example, using technology to instinctively understand through artificial intelligence that the door doesn't have to be open for unwanted relatives. So something, don't you think that will be amazing? We should totally work on patenting this technology. So something in these lines, Mr. Atul, Mr. Pradeep, what would you say is that how would you use technology to combat one evil? It could be anything. Mr. Atul, let's start with you.
I think, frankly speaking, one of the things I would like to have is really have something which helps you avoid procrastination. At the same time, it need not be nagging. Otherwise, it's not a technology. You'll just throw it away. But I think that's something that the technology can probably innovatively offer us. So that's just my thoughts on that.
Very interesting answer, Mr. Atul. It has to bother, but not to the point that we stop using it. Great. Mr. Pradeep.
I wish, we stay away from mobile and our laptop, which is spending so much of time in this pandemic. We wish we were, in person doing this event rather than doing this virtually.
Evil for some, but it's a bliss for introverts. But okay, fantastic. Gentlemen, stage is all yours. Thank you so very much.
Thanks, Nikita.
Thanks. So let me start sharing my screen.
So it's been like 2 years of very, very interesting experience talking to several clients, whether it was in the manufacturing industry, whether it is cement, whether it is FMCG, banking, everywhere, we hear the same conversation is that times have changed. Finance is no longer an independent entity, and there's so much of demand for having a collaborative connect with every other function. That's how this whole FP&A has moved to a journey to XP&A, wherein we are talking about so many functions coming together and wanting to do things in a hyper growth phase. I'm sure every participant here today knows what the expectation is from the shareholders, from the management, that we want to be in a hyper growth mode. And as finance professionals, most of our colleagues are spending 70% of time in preparing data. And that takes so much of time. And at the same time, the expectation to collaborate with multiple functions have really changed the dynamics in which we are doing our financial planning. And that's something which we have seen in the last 2 years specifically. And I'm sure Atul, with his very rich background of having an academics in chartered accountancy and then having 2 decades of experience working with so many organizations for the length and breadth of the planning process, I'm sure we will share some of this with you this afternoon and try to relate to how the dynamics of AI is bringing in and the expectations of clients to bring in and infusing artificial intelligence in the overall annual planning process. And that's how the approach towards FP&A is changing to XP&A, and what that journey is all about, and how we will be able to talk about what are the technology advantages which can bring in, and allow finance players to do more of finance and less of technology. That's something, Atul is going to share in the next few minutes, and we together will probably give you a perspective that we've heard and we've experienced with several of our clients in the last 2 years. Over to you.
Right. Thanks, Pradeep. So with this, let me actually share, while I talk through these slides, let me share some of my experience as well. And what you see on the screen is something that I'm sure some of you who have not really automated or streamlined your planning processes would experience. Especially on the lengthy planning, painful planning cycles, spending night eating those pizzas in office. Of course, last couple of years have been slightly different. But when I actually, started my career, and before joining the technology consulting, I was actually on the other side of the desk. So I spent some time in the, strategic planning team in telecom industry. So in the initial days, I remember we are doing everything, especially the planning, analytics, everything in Excel. And when I joined the company for a month or so, we were all busy, manually consolidating all the numbers. And when I, went to CFO's cabin with our view of, where we are on the existing performance, for the next year, he asked me one simple question. I mean, this was the telecom industry. What he asked me is, what is your view on our ARPU, which is, average revenue per user, and let's say the sales side expenses as a percentage of ARPU, and have you done any benchmarking for different circles that are sending that data? And I said, actually speaking, for last week or so, I was just managing my Excel sheets. There were so many versions, I didn't even have a time to look at the actual numbers, whether it makes sense. It's just that I was able to consolidate it, some time back, and I'm bringing into you. So that's where, probably he also gave me a very good advice, saying that, see, as a finance professional, what is most important for you is to, reverse this 80-20, time spending pattern. So you should actually spend 80% of the time analyzing the data, and maybe around 20% just looking at the, automation of the data, and, probably making those, numbers make sense, data jugglery, and, improving your Excel skills. So that's my bit of it, and I'm sure you would be able to relate this with the, the plans which are, disconnected from sometimes the reality. What finance is probably not agreed by the operational teams. Everybody working in a silo, and, the lack of making changes to the plan, with especially with the different business dynamic that happens, and that's all, kind of adds to a frustration. I'm sure many of us have come a long way from where we were for last few years, especially, I mean, in my personal experience, when I heard that Excel is now having 1 million rows. So earlier, a few years back, there used to be a limit of 64,000 rows, and we used to always complain of moving to a next sheet. And when we knew that it will have a 1 million row, I thought that all problems are solved. But fortunately or not fortunately, that was not the case, right? And continuing with the same thing, and I think in the earlier presentation also, we saw how the whole role of finance is changing, right? So gone are the days where you are just doing a sort of data repository type of work, where you are custodian of the data, and you are actually telling what is the profit loss and provisions, and some of those statutory numbers which has to be complied with the accounting standard. It's actually much beyond that, not just the financial but also the management view of it. I'm sure some of you who really like costing probably would be able to relate to those days, that why we didn't spend really good amount of time understanding standard costing and marginal costing, because that's what really matters in management accounting. So jokes apart, what we have really seen people doing these days is they're also expected to work very closely, especially the people in finance, with the other extended team as their partners in analyzing the data and making sense out of it from a finance perspective. So we call it a financial prudence aspect, whether that makes sense or not. And same case goes with looking at the data from a forward perspective, right? So looking into the future, how the things would change, the changes in the government regulation or the changing dynamics, the market changes or the competitive pressure. So how do you actually, sort of help your colleagues in other department and obviously the office of CFO, CEOs, to guide them with the data-backed decisions. And one more thing is, I always sort of think that when we talk about profitability, we actually take our all actual data and do our all cost allocation and complex formula calculation. But profitability should not be viewed just as a a post-mortem approach. What we also believe is you should always see how you are going to use the resources in future that you will have as a part of your investment or your strategy to reallocate those resources to the right business units or segments which are actually giving you growth margins, right? Or which you think would be the really path that you would want to embark, and probably some of the older product sets or some of the units or some of the regions that you may not want to invest anymore. So that really is important, because from that angle you will never have a data, right? So when you talk about the future profit, future cost allocation, future profitability, you'll never get that data in your ERP. You have to use your transaction data, make the business driver based plans or model, and then look at the profitability. So I'm sure in some ways many of you are doing it in a very, very robust and dynamic business modeling that you do as a part of AOP. But that's what my advice as well, that always look at it from the future angle as well. And again, I mean, if we talk about the process of business planning, it's not really the finance. Really speaking, it has to be the accountability of all the teams who are actually supplying the data to the finance team. And many a times what happens is, at the end of the day, what we get is the line item level financial view of what it means, what it cost, the kind of profits or sales numbers that we look at. We don't really get that view of real drivers at, let's say R&D. It works in a very specific environment. You don't really look at the everyday business. They are actually living into the future. But that's also very critical, because the way you actually analyze and the way you actually link that to your future offering, the new product launches actually affects your sales. So really speaking, your R&D is giving inputs to your sales in terms of future product launches. And you would also need to look at it from a finance angle, whether it makes sense as a strategy or as a way of improving your overall profitability, and so on and so forth. So it's actually a way where everybody has to align and not just look at it as the line item number. So those strategies that we typically discuss in the meeting would also need to be discussed at the business driver level, right? Another example I would like to give, when we were doing one of the iterations of the plan, and in one of the meeting, we wanted to sort of right size some of the costs. So we selected HR cost, probably let's cut down by a certain percentage, and we sort of adopted the top down approach, adjusted those numbers, and that became our finalized sacrosanct final plan. And so what happened really was the contribution from the individual teams and what we adjusted at the top level were not really matching. It was just a high level adjustment. But when we did the actual versus budget variance analysis in the forthcoming year, the HR team started saying that, no, these are not our numbers. We don't really, buy into your view of this variance. That's not the picture that we presented. So it has to be looked at from that angle. That's really not a failure from our team's perspective, and they were also right to a certain extent. And that what really brings into context the very important aspect of the right communication, coordination, and collaboration aspect, not just in terms of a business plan or a annual budget which gets frozen before the start of the year, but also throughout the year, because you need to have that all connected, all pervasive view of the business as well, right? And that's what we see as a to-be vision. So things are really good when the decisions are coordinated. And let's take procurement, for example, they would always want to see that their expertise, how do these expertise actually translate into the financial savings. So when you buying right point of time some of the critical component materials, they should really would like to work closely with the Office of Finance and the CFO to actually find out the savings that they were able to get with the timing of their procurement, or with their insight into their domain as to what the impact it would have. And the same case the other way around as well, so that we can highlight some of those special initiatives or expertise within these different departments. And the same case goes with the some of the others as well, right? So often these are the coordinated decisions which really helps you in achieving those business goals. Let me also share some of the use cases. And typically you see an annual operating plan or business plan covering all the teams, right? So this is an integrated plan, and we've seen many of our customers who use our solution, they actually roll it out across different functions, units, or regions that they work with. But having said that, it can also be extended to some of the very specific use cases for the different teams. Let me give an example of incentive and compensation plan. Now, typically you would view an incentive compensation plan as something that is a prerogative of sales. So you give a stack of money and ask sale, this is how you would want to distribute your incentive and maximize the sale. And you design your own plans for your sales team to achieve those numbers. Now here actually the finance team can be a really be an advisor to calculate the true cost of compensation, because many times you would notice that the quotas are achieved, but they don't necessarily translate into the right mix of gross margin, right? And that's where you will see that the targets are met, the sales are good, but then the profits and gross margins are not really looking up to the mark, and that kind of deviates the strategic plan or the strategic guidance which is set before the start of the annual planning, right? So really speaking, this can be again integrated. So it's not just about again having those drivers in place so that everybody is looking at the same set of numbers, but also align that to the strategic objectives or strategic plan from the top management's point of view. Another good case would be in terms of the operations, where the three key teams are working closely together. So you start with the sales team who's looking at overall numbers, and these days we have a lot of tools on data science which help you predict those sales. And then asking the question to the supply chain team, would you be able to support us on this? Would it be possible at the right price to actually manufacture and distribute those the goods or the services at the right time? And then the finance obviously coming at the same single cohesive view of the performance, saying that yes, this is actually a financial prudence as well. So when you are meeting those objectives, or sometimes you are strategically aligning to those objectives, although it's not a financial best selection, that is actually meeting our targets and our strategies. And the situation can be across any combination of different teams. So really speaking, the integrated planning would only happen when you continuously collaborate with different teams even beyond the annual operating plan. And we've seen people doing that where they disregard the annual operating plan just as a April to March financial year planning tool, and going to the extent of having a rolling forecast. So always look at next 3 quarters, next few weeks, and see how the entire plan look like. So continuous rolling forecast would really help them achieve that objective as well. And finally, to kind of quickly summarize, how do we actually see that happening with IBM Planning Analytics, which are solution which also integrates with some of the other advanced technologies across IBM. We really give a choice of the user experience to the tool, so they can use a very intuitive web-based interface or continue with the Excel, but just as a front end to leverage their Excel skills. So we are not taking away their Excel skills, and you continue to leverage what you already know, but everything is a part of a central repository. So no issues if somebody is not connected to the their Excel, and if those files are not available or those files are lost in emails, no need to worry about that. Secondly, we have also seen that the planning also makes sense, that if you have the same visualization and reporting everything at a one place. So we also included a good visuals and reporting capability within the same tool. Although I know finance people really like the numbers rather than those beautiful graphs. They really like those quick numbers which they can actually interpret and make out in terms of decision making. But this really takes away those pains where you need to port that entire financial data into a visual graphical analysis and then share it with the extended team. So everything is in a kind of one place. And the performance is very key these days. We don't talk about a high level annual operating plan any which ways. Most of the customers that I've been having conversation with, they really like to see a granularity, really planning at an SKU level, or if you're a services company, down to a base process level. And the and the challenge there is, how do you actually allocate some of the common shared services cost, even for our plans or budget, to really have that detailed level of profitability. So it can be a profitability for a cut of customer, channel, region, process, product, whatnot. And finally, in terms of having it on your platter, getting the flexibility of your in your data center, on your premise, or or a cloud. So that's a kind of flexibility that we provide. And when we connect with some of you, probably at in a one-to-one session, we'll also talk in detail about the powerful modeling capability. So it's not just about putting those rules and making the system rigid, but how do these dynamic model actually help you address the challenges in the continuously changing planning process? How do you bring that agility into the system? That's the key, right? So these are some of the key things that our solution can deliver for you. So with this, what I will do is I'll quickly play a video of IBM Planning Analytics before we end this. So just give me a moment. I'll just share my browser. I hope you're able to see my browser.
You deserve more from your data.
Yes.
It's time to harness your organization's data to build more accurate plans, forecasts, and budgets with greater speed and confidence. Most planning processes are siloed, labor-intensive, and error-prone. But you can no longer afford lengthy, labor-intensive planning processes caused by spreadsheet planning or subpar solutions that cause disruptions or can't truly scale to handle your large volumes or complex data. IBM Planning Analytics with Watson is an AI-infused planning solution that allows you to unify, streamline, and integrate planning across every part of your organization to deliver faster, more agile plans and forecasts that can pivot in real time. Gain visibility into real-time data with direct connectivity to source data. All users see the same data and trust in one version of the truth. With one common planning application, you can align users across all departments, from finance to sales to supply chain and beyond, with continuous collaboration capabilities. And changes to one plan automatically flows to others. With built-in reporting and analysis capabilities, you can uncover deep insights using robust dashboarding and visualization. Forget exporting data to another tool. All the functionality is included. What if scenario modeling lets you create personal sandboxes to compare different scenarios and test assumptions so you can see the impact of your decisions before making them? Transcend the limitation of spreadsheets and drive up adoption with IBM's robust Microsoft Excel interface. Keep the functionality you know with added capabilities of an enterprise planning solution. With built-in predictive capabilities, you can put the power of algorithmic forecasting in the hands of your users to improve forecast accuracy. AI-powered planning allows you to augment human intelligence so that you can spend less time on manual tasks and more time on analysis and higher value work. Keep your IT strategy and choose the deployment option that's best for you. Deploy on-premises, on cloud, or on IBM's Cloud Pak for data with the same robust experience throughout, so you can plan from anywhere at any time. Plan for anything. Be ready for everything. IBM Planning Analytics with Watson.
Yeah, so that was one quick, a glimpse into the product. I'll just leave our contact details for a couple of, probably 30 seconds or odd, if you want to just take a note or, take a snap, and then we can end the session.
Mr. Joshi and Mr. Iyer, I mean, we were listening with our ears wide open, and of course, one line which caught our attention was this software lets you know about the results of the action that you take before taking them. I most definitely need it for my personal life. So I hope it is I'm sure it's robust enough to help us in our personal endeavors as well. But fantastic, gentlemen, what a pleasure to have you both with us today. Absolutely amazing. Thank you so very much yet again.